I've waited almost a year to make this move, and in July I finally did it. Not only did it feel great, but I made a profit. This update has it all. What I bought, what I sold, and how much passive income my portfolio has paid me. If you're serious about building long-term wealth without hype, this is the kind of real journey you'll want to see. I'm Steve, the Dividend Dad. Let's dive in. July was another solid month, the third in a row for me. My portfolio gained 2.28%. The S&P 500 gained 2.17%, so I gained slightly on the S&P 500 this month, the investors benchmark. But here's the kicker, year to date my portfolio is up 15.49%, almost double the S&P's 8.59%. You can really see the power of reinvesting those dividends now. Let's break down the biggest winners and losers this month. Biggest winners were Nvidia with 13.35% and Caterpillar with 13.32%, Bank of New York with 10.91%, Bitcoin with 8.84% and Microsoft with 8.2%. And on the downside I had IBM down 13.82%, CVS was down 9.42%, American Express was down 7.14%, Colgate was down 6.18% and Uber was also down 6.18%. More green than red this month, and that's always a good step in the right direction. Before we go any further, just a quick reminder, this video is for education and entertainment purposes only. It is not financial advice. Investing involves risks, so always do your own research. Now, let's talk about what I bought and sold in July. I made two key purchases, Pepsi and a gold ETF. But just as important, I finally sold a stock I've been holding on to for what felt like forever. Here's the breakdown. I bought 2 shares of Pepsi at $271, bringing my total shares to 2.15. Next was a new position. I bought 1.05 shares of SPDR Gold ETF for $321. To decide which stocks to add, I use my own stock analyst comparison spreadsheet. It helps me spot the best opportunities based on value and dividend potential. This month the spreadsheet identified Pepsi, and I had also noticed that Pepsi had made a 2.5% return in the last week of June, after many months of declines. I'd also noticed that Pepsi have started a big advertisement campaign on the TV and in social media, so for me buying this made sense. In July, Pepsi gave me a nice return of 3.75%, but 2 weeks into July, my spreadsheet still couldn't identify any more good buys for me, so I thought I would invest in a gold ETF. I chose SPDR Gold ETF. Now, I'm not going to go into the ins and outs of this ETF, but basically it follows the gold price in the commodity market. The good thing about the ETF is that you can purchase smaller amounts and there are no overnight fees. Well, with eToro anyway. And finally, the move I've been itching to make for almost a full year now. It wasn't a huge sale, but it was a smart one. I sold 0.47 shares of AMD for a nice profit of 6.65%. In real terms, that meant I got rid of a stock that didn't pay dividends, and with patience I was able to turn a small profit of $4. I didn't want to sell at a loss, and I believed it still had an upside. Turns out, patience paid off. If you're new here, welcome. On this channel I share what it's really like to invest from the scratch. With a family, mortgage and bills just like you. I focus on a safe, sustainable investing so we can build a solid retirement fund and financial security without the hype or crazy risk. If that sounds like your kind of investing, hit the like button and subscribe. And if you have any questions, drop them in the comments below. I love hearing from you. And now the best part, dividends. In July, 5 companies paid me a total of $7.60. Here's the breakdown. Coca-Cola with $1.81, EOG with $2.22, FedEx with 73 cents, Realty Income 52 cents, OMC $2.32. My portfolio dividend yield is currently at 2.56%. That's expected to give me an annual income of around $116 and roughly $10 a month in passive income. We're 7 months into 2025 and I've already beaten my 40% target for the year. But let's not celebrate too early, the market could easily throw in a few red months. Still, I'm proud of my progress, and selling AMD, even for a small gain, felt like a smart, patient move. Pepsi looks like a solid buy so far. I played it safe, but that's part of a good risk management. And while I'm all about dividends, my bigger goal is to grow my portfolio to $100,000. So when there aren't any good dividend opportunities, I'm not afraid to go for value or stability, like with the gold ETF that I bought this month. Every month I review my portfolio and look for the best buying opportunities. This can mean my sector allocations get a little bit uneven, but I believe buying discounted stocks rather than spreading my investments evenly gives me the best long-term returns. My modified dollar cost averaging. I also keep my portfolio manageable so I can stay focused and make smarter decisions. Every smart move, every dollar earned in dividends, it all adds up to the bigger $100,000 target. Thanks for watching. If you found this update helpful, please like and subscribe. It really helps grow the channel. My goal is to show that the average person just like me can build a solid financial future through consistent dividend investing, and you can absolutely do it too. Thanks for being a part of the Dividend Dad community. See you in the next update.